Hey, what's going on, guys? Welcome to another episode. In today's video, I wanted to talk about, is it the right time to invest? Should you invest now? Should you invest later? Is the stock market gonna crash like it did back in March of 2020? Should you just run for the hills with all your cash, or should you slowly be putting it in the market like a level 3 investor? Let's talk about it. So, you're thinking about investing your money in 2020 or 2021 or 2022, whenever you're watching this video, and you're looking at the charts of the market and you're saying to yourself, is it gonna go down? Should I wait? Should I invest later? Because the price drops, I can get things at a discount. And if that's the case, won't I make more money doing that and just waiting and waiting and waiting? And then as soon as the opportunity presents itself, diving into that opportunity. Now, a lot of people are going to tell you, no, don't wait. Some people are going to tell you, yes, do wait. And I want to take a different approach. I want to take the approach of, let's think about what each option is going to do for you, right? Because at the end of the day, you want to make the most bang for your buck. You want to put your dollar in and take $100 out. Now, that's very difficult to do in the market unless you're talking about the very long term or the very small market cap companies where they are the next Apple, the next Amazon, the next Tesla, the next Google, those types of firms. And it's very hard to dissect which ones are going to make big and which ones are going to not make it as big and they might fail. Let's think critically about what we have at hand here. So first and foremost, you want to make money and you're thinking about putting in the market, and the market is at all-time highs right now, which if you think about it, the market is almost always at all-time highs. At least in the US market, statistically speaking, we have had more days each year of all-time highs over the last 90 years than we've had lows. And that is because when the market crashes, it crashes hard, and then it takes a long time for it to kind of trickle back up to where it's going, which is up. And when it trickles, as soon as it passes this level, it typically goes down a little bit, up a little bit, down a little bit, up a little bit. So you have a lot of highs. And because over the history of the market gone up and up and up, there are of course going to be more and more highs as you go. So if you think about this as a level 3 investor, you want to have the strategy in place where you can make money when it goes up and you don't lose as much money when it goes down. Now, that's great and all, but how is it done, right? How do I do that? How do I set myself up? I'm not Nostradamus. I don't know how to predict the future of what's going to go up, what's going to go down, what's going to go sideways. All I know is that I want my money to grow. I want this $10,000 stack to become $100,000, $1 million, right? And of course, we're going to put more money in because we're level 3 investors, right? We want to put money slowly in as we make income, as we make dividends, as we make profit on our investments, as we make income from our small businesses, whatever it may be. You want to put this money and you want to make it grow. And the best way to grow is at exponential growth rate, right? Something that goes up a lot. And you can't predict, again, you can't predict where it's gonna go, what's gonna go. You just have to think about where the market's going, think about where this industry's going, think about where this company's going, and then make the executive decision to pull the trigger and invest. And of course, as we know, we wanna invest over time. So if you think about that philosophy, right? Let's say you had $10,000 to invest to it. And if you watch my previous video on Bob and how he grows, and I'm gonna link it up here, it's gonna be on one of these sides. If you know that you got to invest over time, and you know that the market has a history of going up and up and up, and we also know that you can't really predict the downs just like we can't predict the ups or the sideways. So now we're left thinking that it's not possible to time the market, but what it is possible is to time our investments. And the beautiful thing about investments is that it's just math. And if you're not good at math, I wouldn't recommend you to do this, or just get better at math. But essentially what you want to do, you want to slowly put the money out there. And I like to call this method the reserve in a crisis method. Just made it up on the spot. But essentially, it's exactly what it sounds like. You invest normal, right? But you have a little cash reserve, right? Maybe it's 5,000, maybe it's 500, maybe it's 50 bucks, whatever it is, right? But it needs to be proportional to what you have in the market, not one-to-one. And remember, there's no real science behind this. No one's cracked the code on this. Some people are going to tell you it's a 1-to-1. Some people are going to tell you it's 2-to-1. Some people are going to tell you it's 1-to-2. There's no real formula, unfortunately. But what you do have is you have the trial and error method, which is you do it once. You say, okay, I'm gonna leave 50% or 20% or 5% of my money in cash or other investments, liquid investments, where I can pull it out in a short moment's notice and invest it into the market if we have this crazy big crash. Now, imagine if you had this $10,000 not in the market, not growing exponentially, and 10 years go by, and we haven't had a single drop in the market for 10 years. This is the classic example of 2009 to 2020. We had 11 years of prosperity, but let's say you had 10. And let's say the market did about 100%. Now, you could have had $20,000, right? Or you could have $10,000 sitting in a cash bank account depreciating in value. What does depreciating value mean? Well, statistically speaking, your purchasing power goes down 2 to 3% per year because of inflation. And now, if you want me to do a video on inflation, I can totally do a video on inflation. Just let me know down in the comments below if you'd like to see it. But essentially, every single year, this $10,000, someone is coming and taking it out of the bank. And again, 2% out of $10,000 is $200 per year that your money is losing to inflation. That's a problem. And some years it's $300. That's a problem. And if you think about it, after 10 years of someone coming in and removing your purchasing power, and they say, I'm gonna keep taking this money, I'm gonna take your $200 to $300 and I'm gonna just put it in my own pocket. Wouldn't that make you upset? Because here is what we have. We have, after 10 years, we have so much less. See that room right there? We have so much less money on the table. And we lost, after 10 years, about $3,000 worth of purchasing power. That's insane. And let's say you did time the market at that point and you did get a 20, 30% savings on the investments you would have bought anyways earlier. Well, if you think about it that way, now you have $7,000 to invest. You got 20 to 30% off. You're really only getting $9,000 or $10,000 worth of value, and you missed out on those gains before. Instead of having $20,000 lose 30%, let's use that as an example, 30% of the value. So you only lost 6, you're at 14, but instead you're investing 7 and it goes back up to previous highs, and now you're left with 9 or 10. So you see how investing over time can actually make a big difference, and having a small little cash pile, whether again, 5, 10, 20, 30% of your market portfolio, can be a nice little boost. And a lot of people use this as a savings account. An emergency savings account is really, really useful. If you'd like me to do a video on that, I'm more than happy to do it. I might have already done it, but it is important. Emergency savings is really, really important to have, not only for yourself, but especially for these types of blue moon events where they don't come very often, but when you capitalize on them, they can make you very rich. Again, 10,000 slowly put into the market over 10 years of beautiful growth. We'll see if that happens. Obviously, if there is a flash crash, it would be good to have some cash on hand, but I wouldn't suggest to have all your money in one place, sitting, building dust. Really, it's just a problem you don't want to have. And slowly, it kind of loses its value, its purchasing power, and over time, you are left with not a lot. And so hopefully you found this valuable. If you have any other questions, comments, anything you'd like to see, put them in the comments down below and I'm happy to do a video on it. If you found any value in this video, remember to smash that like button. It really helps out the channel, and we'll see y'all in the next one. Peace.